Let's drill down into the companies. Let's begin with Imperial. Quick reminder, Imperial is, of course, a diversified industrial and retail services group with activities spanning logistics, car rental, tourism, financial services, vehicle distribution, and retail. Operates in South Africa and Southern Africa, etc., etc. Now, Paul, when you look at Imperial, against all these other factors that we've mentioned within the industry, what do you see? Do you see a stock that's perhaps ready to take advantage of the growth that we've been speaking about, that's perhaps beginning to pick up?
Certainly. It's one of South Africa's preeminent industrial companies. It's got a market value of about 30 billion, as you point out. It was one of South Africa's success stories of the 1990s. It was built by Bill Lynch, who tragically died of cancer, before he was able to kind of execute his full vision. Went through a very, very bad patch because his departure coincided with the big economic slump. They were in the process, though, able to dispose of their air freight and SAF air business, which, as you know, airlines by one means or another, terrible business.
Yep.
They also spun off Extra, which was a heavy equipment leasing business, which was very capital intensive. And the new CEO, Hubert Brody, felt that it made more sense to focus on the logistics and the motor vehicles and the European businesses that they've been building. I know Hubert personally. He's an interesting guy. He was not the guy that you thought would be made the CEO of a group of this size,
Sure.
But he came in for media training with Bronwyn Nielsen, and then he's kind of hit the skids and things look good. So I am very positive about the group. I think it does have the best assets, and it's got a great management culture. So it's, for me anyway, the sector leader in this space. Question of whether you think it deserves a higher PE than the 9, 10, 11 PE it trades on, I guess, is the real issue.
Craig, if I can come to you. Now, when I was doing the numbers again, sales up 22%, and they said core performance will be sustainable into the second half. Now, that core performance was quite strong in the first half, though headline earnings as a whole was just flat at 7.27 cents because of the impact of the Black Economic Empowerment deal that was done the year before these results. Your take on on Imperial?
Yeah, look, I think operating profit in the first half was actually cracker, about 23% up. But bear in mind, we're talking mainly logistics here, and that's only about 30% of the revenue of the group, and even a smaller amount of the profit. So there's vehicle sales that largely drove that increase in profit. And I think in the next 6 months as well, vehicle sales will still also help that story. The logistics side, obviously, what's going to change the game is the acquisition of a German company. I just need to make sure I pronounce it right, Linkering. Huh? So that's almost a 3 billion rand acquisition. That doesn't show now in those December results. We're going to see that coming forward in the next set. And obviously with a weaker rand, that's going to help the story there as well. So that's obviously going to boost the logistics side, increase its portion. And so from that point of view, I think Imperial's looking quite attractive.
Yeah, interestingly, since the results were announced, I saw two ratings from investment analysts and Credit Suisse. They raised their price target for that stock 1.2% up. On the other hand, HSBC have cut. There doesn't seem to be consistent opinion, or at least agreement on what the prospects are for this company going forward.
And I think that is part of the problem, because logistics companies are perceived to be sort of GDP plus type businesses. In other words, you expect them to grow when the economy grows. The share price of Imperial went from below 100 Rand a share on the 1st of October. So if you'd been paying attention, you could have bought them back then when things looked very shoddy. You'll remember the second half of the year, we fell down in August and things looked as though we were going to be down for the year.
Yeah.
They were below 100. Now today they closed up at 150 Rand. So it's a 50% improvement in the matter of 3 months for last year and the 2 months this year.
Sure.
The problem is that this is the kind of stock we're dealing with, even though it's a big cap. I'm afraid for me to buy them now, it just feels like you've grabbed the thing after the horses already bolted out of the stable.
Yeah, I just need to make sure that I get this right, because Credit Suisse cut them. They cut them to neutral from
those guys probably cut the share price target because it went up. So they said, "Oh my God, now it's gone higher. I have to downgrade my rating, otherwise I look like an idiot."
Craig.
Yeah, so look, I think HSBC, the last rating I heard was about 170 Rand. You mentioned now that they cut that.
172 Rand.
So that was the highest that I'd sort of seen.
Okay.
But I also get a feeling that it's trading at pretty much fair value. It's run quite hard. You know, the prospects more lie in vehicle sales than logistics, but you have got this acquisition. They made that other acquisition of CIC locally, and that's got very low operating margins, and I think with synergies they'll be able to improve that. So in the short term, there's certainly a lot. I mean, of course, you don't have that BEE transaction. So I think in the short term, you could still see the share price going higher. But I'd rather be looking for pullbacks to get into it. It's not particularly hot.
I see. You've just declared your position on it. I was going to come to you and say, so you're angling towards not so hot. So it is not hot in your book. Paul, for you?
Look, I'm going to go with hot, but I'm doing it on one basis alone, and that's because Hubert Brody is a very smart guy, and he's told me that he thinks there's still scope for one big logistics transaction in this country. And you know, Bidvest is partly the other big player there, so perhaps on a valuation basis. And it's a very solid and responsible company, so I don't think you're going to lose money owning it. So as a little portfolio sock filler, I'll go with a hot rating.
Craig, do you want to change your mind?
So look, I'm talking purely on a valuation basis. So as I say, on a long term, I think they're still going to have bolt-on acquisitions in Africa, and you're going to make money out of it. On a valuation basis, there's no need to rush into it. But on a long-term buy, it's still going to move up. So you know, I suppose if I had to call, I'd be hot on long-term, not hot on current valuations.